The real estate market continues to ebb and flow back and forth on the back of mortgage rates. While there's many potential home buyers that are waiting for those home price drops that were forecast just last fall. So, in my real estate market update for April 2023, I'm going to take a look at the impact mortgage rates are having on buyer demand. And I'm also going to share some surprising news with regard to those home price declines that had been forecast. So, stick around to the end for that, and we'll dive into it right now. Hi, this is Andrew with the Andrew Smith team of eXp Realty here in Frisco, Texas. And as mortgage rates rose rapidly in 2022, there was widespread expectation that those rising mortgage rates would just cause buyer demand to disappear, basically evaporate. And while buyer demand did experience a rather significant drop last summer, once the shock about the higher rates had been absorbed by home buyers, demand actually stayed stronger than many had expected it to be. And what emerged was a mortgage rate of 6.5% appears to be the threshold. I'm going to share my screen with you now and run through a few slides with regards to buyer demand and mortgage rates, and also talk about those home prices and those declines that have been forecast. So this graph that we're looking at here is comparing mortgage rates with buyer demand. And as you can see, the areas in green under 6.5% show that demand when rates are at that level is either good or strong. We start to see weakness in buyer demand once rates cross 6.5%. And once rates go up above 7, as they did for a little while, we definitely see a bigger drop off in buyer demand. This was actually noted recently by Realtor.com. As they said, each downward tick in mortgage rates is met with increased buyer demand as many eager home shoppers take advantage of the slightly lower cost of financing a home. In fact, many of the buyers now seem to realize that mortgage rates aren't going back to 3 or 4% anytime soon, in or ever for that matter. I know that could be a long time, but it doesn't look like it. So as a result, especially with some uncertainty that still exists out there, anytime you see downward movement of mortgage rates, you definitely see an uptick in buyer demand. And we saw this most recently just last month in March. Rates started rising again in the early part of the month. Then we had some bad economic news. We had a couple of bank failures, and there was additional uncertainty about the health of the overall financial system, and that caused rates to start coming back down. In fact, Sam Qatar, the chief economist at Freddie Mac, noted that turbulence in the financial markets is putting significant downward pressure on rates, which should benefit borrowers in the short term. So with that in mind, what is the impact of rising and falling rates on home prices? Well, if you remember, just last fall, headlines like this started emerging and they were all over the place. In fact, the Dallas Federal Reserve raised some eyebrows when they warned that prices could plunge as much as 20% in quite a lot of markets across the country. And price declines in all major markets were readily being forecast. Now, two challenges within the housing market is that ultimately all real estate is local. So whenever we see reports like this about national forecasts, it doesn't necessarily mean it's going to play out that way in your local market. The second thing to remember is that a lot of the numbers, actually all of the numbers that are usually reported, are old. And it's not that old news is being reported on purpose. It's just the way most data tracking works. So in just a moment, I'm going to show you what was recently released with regards to home price appreciation, comparing January 22 to January 23. Now, the challenge with that is for homes to close in January, those homes went under contract in either late November or the early part of December. So that essentially is a snapshot in time of what the market was doing 5 to 6 months ago and is not necessarily reflective of conditions we're seeing out there on the streets each and every day currently. But how does this impact potential buyers? Well, a recent study was done, and neuroscientists have found that people spend about 90% of their lives using what's called narrative circuitry rather than direct experience. So, a simplified format of that. It basically means that 90% of the time, we end up living our lives according to what we tell ourselves to be happening. And that doesn't always directly relate with the actual experience or the actual events that's going on as of that day. We've all experienced it. Think about having a job interview, a job review, a wedding, you name it, anything coming up, you get rather anxious about it in many cases. And for the majority of the time, the majority of people, the actual event is never as bad as you played it up to be in your mind beforehand. That's essentially what they're talking about here. Now, with regards to those home price appreciation numbers, here is what was just recently released regarding price appreciation by region. And again, this is January 22 to January 23. I'm covering some of the numbers there, but the national average was 5.3%. There was flat 0% appreciation on the West Coast. And in the South Atlantic and Mid Atlantic states and along the Eastern Seaboard, we saw the highest appreciation of between 6 and 9.6%. So, with that in mind, when you combine that data with the headlines that were just put out there in the fall, it's no wonder that many potential home buyers and several that I've spoken to in the last several weeks are telling me that they're waiting for home prices to fall before stepping back into the market. But what if I told you they already had and they're on their way back up? Yeah, you haven't really heard that in the media right now, but that's actually what the most recent data, the updated data, is actually telling us. Now, on a national level, home prices generally are considered to have peaked in June. It was a little bit later on some of the eastern seaboard areas, which is why the price appreciation year over year for January in those areas was higher. But here's a look at Frisco. In Frisco, our prices actually peaked in April. The run up from January to April is the first part of this graph that you see here. The sharp decline that you see is actually April to August. Then we were flat for a couple of months. Then we actually started going back up. Had a dip in January, but recovered again after that. Now, that decline of home prices that we saw in Frisco was actually a 17% fall between April and August. So, where do prices stand today relative to where they were at their peak? Well, here's how it looks locally in this area. So, here's where the current prices are relative to the peak prices of April of last year. Frisco is now down 8%. So you'll remember that Frisco's home prices fell 17%. So we've already recovered 9% of that here in Frisco. And you can see generally somewhere between 13 and 15% across the board for our other local cities is what was experienced, with the exception of Allen. Not exactly sure what happened in Allen, but Allen actually saw a 27% decline from peak in their home prices. But what is interesting to note, even in Allen, is that their prices fell between June and October. And since October, their prices have been relatively flat. No further large declines have been taking place. Now, obviously, all of this could change. No one knows exactly what the future holds or where this is all going to go. But enough new data is starting to come out that Zillow, Moody's, Fannie Mae, CoreLogic, and other main forecasters are all starting to update their forecast for 2023, and they're all improving what they think the housing market is going to do, meaning they're not forecasting declines as steep across the board as they were previously. Now, if we bring things more current here and we take a look at the first quarter of 2023 locally, how have our prices done? When Frisco were flat, January through March were relatively flat. Prosper's up 7%. Salina's down a little. McKinney's up 3, Little Elm 7, Aubrey 10%, Melissa's up 1%, and Allen's still down 4% over 3 months, and Plano's down 3%. So overall, you can see that the majority of our markets are already starting to recover. Anywhere in green here, their pricing is already starting to recover from where it was. So why is that? Why are home prices recovering faster than anticipated and being relatively sticky right now? And to be honest with you, it comes down to supply. As we noted at the beginning of the video here, demand has actually stayed relatively strong compared to what was forecast. What is lacking is supply. It's simple supply and demand economics. And although the new home builders here continue to put out product as fast as they can, and they're building, and there's a lot of new projects coming online, we are sadly lacking resale inventory, which is understandable. If you're a homeowner sitting with a 3% mortgage, why are you going to sell that home and trade up to a new home at 6 or 6.5%? That's something that isn't quite making sense right now. And there's not enough current homeowners willing to jump into the market in order for us to see the inventory levels climb. But Andrew, I've seen it on the news. I've seen it. The number of homes for sale is increasing year over year. That's right. We had record lows in 22. And there is more inventory now than there was a year ago, but not compared to pre-pandemic. So I did a snapshot here just of Frisco's inventory to kind of show that. Okay, so you can see this is where we are on the far right side of this graph as of today. And you can see where that is relative to where we have been historically starting in April of 2018. So yes, there are more homes for sale now than there were last year, but relative to 2020 all the way back to 2018, we are still very short. Now, and the other challenge with that in real estate is that a lot of people try and time the market, but it's very difficult to do, virtually impossible, because you're never going to actually know if you've hit peak or hit the bottom until after it's already happened. Right now, from a pricing perspective, it appears as though the worst is behind us, at least here in North Texas. This will play out different in different areas around the country, and it's best just to stay up to date on what is happening in the market you're most interested in. In the description below, I have got a link to a market report I put out each and every week. It is updated, so you can always get the most recent information. And if you are considering buying or selling a home, I have my latest home buyer and seller guides available for free download in the description below as well. So hopefully this information has helped. And if you have any questions whatsoever about the local market or a situation you'd like to discuss in more detail, please don't hesitate to reach out. You can send me an email at andrew@theandrewsmithteam.com or give me a call at 469-296-5230.